What you're looking at here is my $50,000 live Forex account that's running on epicflow.io. This is the end of month one. I didn't place a single manual trade during this period. I didn't adjust anything, any of the parameters, any of the exits, or any of the timing. It just ran the algorithm that is in epicflow.io Account AutoPilot. All the exits, the equity curve, the risk, it was all handled by the program. In this video, I'm going to walk through exactly what happened over the first month, what I paid attention to, and what especially I didn't touch at all. And I'll go into a little bit about what's going to happen in this next month, especially with some of the political climate that's happening. And if you're new here, what you just saw and what you're going to see is my live account. It's not a demo, it's not a backtest, it's not a simulation. It is real cash running real trades through the epicflow algorithm. epicflow is running everything. I just sit back and watch. Usually when I wake up in the morning, I'll check the results and see. This last month, I had 52 exits. And what that means is we have bots that run for each currency pair that is selected. And whenever it reaches its configured profit targets, it will have an exit. So we had 52 of those, which helped to generate 2.7% return in month one. That equates to about $1,400. So what I'm going to go over here is exactly what that was, how that worked, and walk through some of those exits.
Okay, so what we're looking at right now is our main dashboard. And you can see that we started this back on December 22nd. Today is January 20th. So we've been running this a month, just shy. And we can see here that in that 4 weeks, we have had a gain of 2.7%, roughly. And part of that, as I mentioned in the previous video, is going to be some of the transactions. This transaction is we had interest paid on us. That's an incentive that OANDA has, that it will pay you an interest on any unused margin as long as it averages over $10,000 for that month. So taking that out, we had just about a 2.6 return gain from epicflow's exits. We can see right now we are currently using about 11% of our margin. So of our balance of $52,544, we are using about $5,600 of that right now. And a big chunk of that came last night. You can see here that these two lines, green is our balance and blue is our NAV, our net asset value. So what that means is it is our balance minus the unrealized P&L. So this is what I call the current run. So this is the current in-flight trades. So big drop last night that had to do with the current US, European Union, Greenland trade deal / negotiation / bribery, which caused the Swiss franc and other pairs to move drastically. But that's okay. We're going to hop into that and explain it. And since it's right in the front, we'll address that first and then go over the exits that we had. So we can see here that when you get into epicflow, when the bots start running, you'll need to get accustomed to seeing red. This is while the bots are running, it will continue to buy when the price moves against you. So if we take a look at our current run, we've had of US dollar Swiss franc, we have had 22 orders in the last 5 days and 4 hours. So we can see here, and the way the algorithm works, as I explained earlier, is as the price drops, which is the gray line, we'll put orders in at set intervals. The green line is our average cost. So as price continued to drop, we buy, and we can see here yesterday evening around 9:30 my time, the price dropped quite significantly, and we bought all the way down, which brings the average price down with it. And now we will wait. If the price drops further, we'll continue to buy. If it goes above this average price, buy our profit margin, which by definition is here, 15 min profit exit plus the profit buffer, which is 20 pips. So if it can hop across that line, we'll have a minimum profit of $114. So if we take a look at this, we had another one during this first month run. It had 10 orders over 4 days. And you're going to see the graphs look very similar. that it'll run, it'll buy as it drops. And as soon as there is a run up, it will then exit and we get the gains. So we're not worried about these drops. Volatility is our best friend. And we have a lot of risk management, margin management built into the account autopilot. So it will protect you. So as you can see, we've already increased some of the parameters. So it won't buy as frequently if the price continues to drop. So if we take a look here, we can see that in the first month, our EuroCAD it's on its 8th run, so it had 7 exits. We can see each of those exits here, and each one exited for, we'll say, an average of about 10% on the margin used. This was an excellent exit here of $196 with 20 orders. This is a short, so remember, it's an inverse graph. And we took advantage of this run down, if you will, this price drop of EuroCAD, which was last week. So that ran and exited for a 12.5% return. Our Australia Swiss franc, it has 10 runs in total, so 9 exits. And we can see here that each one of those also had a healthy return on the margin used. As the orders increase, we can see here like 2 orders. It's a relatively minimum amount of margin used, this MU, that's $84. As the number of orders increase, that margin used increases, which will increase your overall profit dollars generated. However, the gains stay relatively the same from a percentage standpoint. Euro USD, we've had 15 runs. There's been quite a lot of volatility, especially in the beginning of 2026. So we've had 14 exits, and we can see here the majority of those have been relatively healthy as well. Handful of orders, 10% return for the most part, 7% here. Now it's on a bit of a drawdown as we wait for the outcome of this new trade war, but we are primed to sit and wait. So that's the beauty of this is I can be sleeping, there could be an agreement, there could be something that happens, and Epic Flow will manage that for me and manage all the trades. Euro USD also had 15 runs, 14 exits. And we can see here, majority of these were relatively small number of orders. There was big movements very quickly, and we were able to take advantage of that. And the last spot we have here, which was added halfway through, you can see most of these have been running for 28 days. That's basically how many days we've been running this account. And the USD CAD swapped out with the New Zealand Swiss franc halfway through, and it has had 7 completed exits. Again, these are just about 10% return. So a healthy system that's running, being at 11% margin is healthy. As that increases, we have auto backing off mechanisms that will slow down the purchases. So we want to keep the margin use generally around 30 to 40%. And then we start pausing bots and managing potential drawdown in those situations. But the added benefit here is that the pairs that we have, there is, apart from the EuroCAD, there is positive financing. So this is the daily swap fees as we hold positions over a 24-hour period. So even if we don't have exits during a day, we are still accruing that credit, that finance credit into our balance every day. Relatively small here since we're using a small amount. Some of the other users that have larger positions, they're generating significant interest rate payments every day. So that's another added benefit with the pair selection that we have. So if we go through the emails, you can see we've had a large number of exits. Each one of these where you see completed or run was an exit. This account has both a demo and a live. However, the majority of the exits were on the live. But I did want to show one on the demo. The New Zealand Swiss franc had a huge run up yesterday and generated a significant amount of profit for this that was running for, this was a 42-day run. There was a big drop in the New Zealand Swiss franc at the end of the year last year. And this particular bot just bought. You can see we had 26 orders. In that 42 days, it generated a significant amount of finance on $4,000 of margin used. And it had an exit, a huge exit. We do these trailing stop losses where I think it was up to 50 pips at one point, and finally exited for a huge return of almost $1,000. But if we take a look at last week's summary, just the second week in January, we can see here that we've had a very healthy return of almost 1% during this week alone. Again, volatility is Epic Flow's best friend. The prices can stay relatively flat over time, but as long as there's up and down movement during that run, we can exit. So that's month one in. 52 exits, 2.7 return on the starting value of around $5,100. Didn't touch a single trade, didn't change any of the configuration, just woke up and checked the app every day. So what matters to me more than the numbers that the system, the application did exactly what it was designed to do. Manage risk, manage margin, and execute without emotion. I can see here that, this last day was scary. I can imagine that if you're doing this manually, you would panic, you would sell. And this is the best part about automation, is letting the system handle that for you so you don't have to worry about it. So I'm going to keep this account running and continue to share these updates, wins, losses, and everything in between. So you can see how it behaves for me. And if you want to set it up yourself in demo mode to follow along, you can do that too. So just go to epicflow.io, sign up. We have a little onboarding wizard that walks you through how to get a OANDA connected, which is also free, and you can get started to play around. All right, I'll see you on the next update.